Good afternoon. This is Chris Robinson, Robinson Ag Marketing, with today's post-close grain and livestock comments for Wednesday, October 8th, 2025. Well, I'd say the highlight of the day was the fact that we had new all-time highs in the feeder cattle. We'll get to that, but that contract looks like it's just bound and determined to keep rallying no matter what. You had new highs in the S&P 500 above 6,800 for the first time ever. The Dow Jones is closing in on 47,000. You had obviously a lot of the hullabaloo and noise about gold being above 4,000. So you have a lot of interest in commodities. Sadly, there's not a lot of interest in corn, wheat, and soybeans from the speculative public as of yet. December corn finished up 2.25 cents at 422. Been talking about this 422, 423 area for a while. It's the 20-day moving average. November beans finished up at 7.5 cents at 1029.5. Anything north of 1023, why is 1023 matter? Well, you take the entire mess that we've had to deal with in 2025, a high of 1075 and 3/4 and a low of 970 and 1/4. And 1023 is right snap bag in the middle. So we're north of that now. We'll see if we get some sort of stabilization with, obviously they're talking between $13 and $14 billion once they get the government reopened. I think that's what the numbers that are floating around we're looking at, and how much of that will make a difference to people, how much of it will be based on soybeans versus corn. You got to remember, we've, in the last 15 years, this is a pretty interesting statistics I saw today. In the last 15 years, the growth in soybean production in Brazil and South America has escalated so much that that's a part of the problem with, our supply and demand situation. Is all of the soybeans that China needs have been taken care of by the ever-increasing production coming out of South America. We have not had the promised biblical droughts, from Al Gore and company and Bill Nye the Science Guy, and we have not seen that. If we ever get that, then we could have a real problem. But we have not had a real major drought here in the North America since '88. People remember 2012, but '88 was really the big one. And so if we ever had that again, that would obviously impact yields. Although, seed technology is a lot different than it was, 40 years ago. So we'd see there as well. But at the end of the day, it's a supply and demand problem. China eventually will come back to the table, I would imagine. But it might take longer and longer than a lot of people had expected. I mean, here it is, we're in October. And, we thought we'd be wrapped up with this thing by April or May at the latest. Wheat finished up 0.5 cents, but it's fighting for its life down here, contract lows. If December Chicago takes out 502, we've got a problem. That'll be new contract lows. Kansas City wheat finished up 1.50, but again, it's fighting for its life down here at these contract lows. If you are storing wheat, don't just store it and ignore it. If KC wheat takes out 488, there's going to be more sell pressure going on. So again, defend, and hope that we get either a weather issue or a demand issue, which helps turn the fundamentals around on this crop. It's really what it comes down to. So don't want to beat a dead horse. Don't want to be overly negative. The good thing is, at least we're not going to get a USDA report tomorrow to complain about. That's been kicked down the road. Who knows if we'll get one next month or the rest of the year. It depends on what happens with this government shutdown. I would imagine it would be fixed before the end of the year, and then we should get the final production number in January. So the farther along we get into harvest, there's some ideas out there that the yields are not there in corn. Great. We need a lot more of that. Same thing. We need a lot more of the yields aren't there in soybeans to really do what? Well, we need a bullish story to help drive these prices higher. I know it's a perverse way to look at it, but that's what we're going to need here between now and the end of the year as we get into the middle harvest. Switching over to The protein complex, December fat cattle, 238.8, up another $1.50, 1.15 today. No new contract highs, but it sure looks like it wants to. The numbers to watch for December fat cattle, I will tell you, 241.35. That was the September 22nd high. So that's the next hurdle. And then, of course, the contract high at 243.57. We finished today at 238, almost 239. Certainly feels like they want to push it higher. Feeders, November feeders. So once we popped through 363, and if you've been following my letter, we were watching that level as a key. It was the top of the wedge. Now 363 looks like it's going to be the floor that's going to launch us to, 375, 380. I mean, how long before we start talking about $4 feeder cattle? We've been watching this kind of in amazement since last November. Last November, we were down at 257. So from 257 to 368, it's just been incredible. And it's also been really an education on how the best hedge for producers in a market like this, if you needed hedges, right? Because we didn't know this was going to happen. If anybody told you this was going to happen, gosh, would you even have gone to this? It's hard working cattle, right? If you knew this was going to happen, why don't you just own cattle on paper, be a virtual rancher? Why do all the hard work and everything else, and also take all the financial risk? Nobody knew we were going to have an explosive rally continuing like this, and anybody that said they did, they're completely bananas. It's one of those things. And if you did hedge your prices, if you did hedge your risk with futures, it's been an education as to when you have markets that are trending higher like this, higher and higher and higher and higher, your best hedge in many cases is using a put option versus selling the futures. So I'll keep harping about that till the end of time, apparently. Who knows? At some point, this cattle is going to turn around. It certainly did back in 2015, 2016, if you guys remember that. But again, nobody's going to get a text message the day before it happens. So keep rolling your floors up. If you're going out and buying new animals, you absolutely positively, 6 months ago you were buying a car for $50,000. Now the car you're buying is $150,000. I mean, you need to be aware of that risk because, again, nobody cares what you paid for them when you go to sell for them. You're not guaranteed a profit. We want to make sure that we hedge ourselves and lock in all this revenue in case this revenue goes away for some reason. And then finally, what happened in the hogs? The hogs lower. You saw more spreading today as people bought cattle and sold hogs. We did make a new 6-week low. We did manage to settle above 86 cents in Dees lean hogs, but that contract is definitely at a key point here. If you look at the move up from the April low to the contract high just 10 days ago, 91.50 area. Why is 86 such a big area? Well, if you follow my letter, and again, if you're not, sign up for it. Take a look at it. You'll learn, if anything else, you'll learn a lot about what technical analysis can help you do. Again, my background, I've been in the business 32 years. I spent 19 years trading for myself on the floor. I would still be on the floor if the floor hadn't gone completely electronic. I'll be honest with you. The floor really went away in 2008. I was 40 years old and transitioned into working with farmers and producers in 2010. So my job is to help share what I understand about markets, what I've learned about markets, to help you make better decisions. That's really what it comes down to. I don't have a crystal ball. I can't tell you where the highs or lows are, but I can help you watch for key levels. And again, it's just stuff that 95% of it's just doing the homework and paying attention to it, which if you're running a business, if you're running a ranch, if you're running a farm, if you're taking care of a family, there's only so many hours in the day. And that's what I can help you do. That's the value I can bring to your bottom line is I do the homework for you. I focus in on this one little area. So at least if you call me up, I'll give you some good levels, I think, for you to help make decisions, which brings me back to December lean hogs. This 86 level is very, very important. It's 25% retracement of the rally that we had from 67 to 92. These levels attract a lot of interest. We've tested this level now 3 or 4 times in the last 6 days. So that means every buy program and every sell program is out there making decisions at around this 86 cent level. If this was to fail, it opens up the door to some more pressure to the downside. Again, so if you're long hogs, if you own hogs, and if you don't have a hedge, get one on. I'm not calling a top, but you don't want to leave a bunch of revenue on the table. So that's it in a nutshell. If you're looking for help, give me a call. Chris Robinson, 312-638-8868. I can custom fit whatever you need. Some people have more money to spend on hedging. Some people have, 1,000 acres, 500 acres. Some people have 15,000 acres. Whatever it is, you've got risk. There's a hedge out here that can help you manage that risk. Again, this is Chris Robinson. Have a good night. Take care.